Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Friday the 13th, January 13th, 2017. I am Frank Ochoa, aka Pivot Boss, and here's a look at the daily time frame of the ES. We're still kind of stuck in that range at these highs. You can see what we were looking for to begin the week was for potential rejection of the previous month's highs for a shot at pushing price into the previous low. And we've gotten halfway there throughout the course of the week with lower highs and lower lows, but obviously it hasn't been any follow through. This thing has not continued lower. It has not taken the ball and run with it. Bears have had their opportunities and just been stifled at every turn. The market continues to trend higher, and at the moment, this thing still has more upside on a higher time frame basis left ahead. If you look at this from a wider perspective here, the latest two key ranges were from Brexit here and from the impulse range from election night here in the US. And the Brexit key range has led to a 100% expansion target here, and the election night key range has led to a 100% expansion target here. So you can see that both of those key ranges led us right to these targets, and now there's one target left to reach, and that's above at 2376. 2376 half is the 100% expansion target from the August key range back in 2015. So right back here, this is the key range we followed much of 2016 because it was fantastic, gave us great edges. Now you can see prices attempting to hold above it. The election night dipped below it, and then we've had a big drive back up. So we could be looking at a continuation overall toward 2376 half on a longer term sense, but we got to watch for the market to continue to hold key levels along the way, and that's what the market has done. So for example, if there's a failure to hold 2214, it could be significant. But even more important is that 2185. Failure to hold 2185 would auction this thing much lower, but until that happens, this thing is quietly pushing higher, and there could still be at least another 100 points in this thing. 2276, 2376. It could push right into that target here very quickly and tap that one out. So right now, just wanted to talk a little bit longer term because the intraday and shorter term charts here haven't been conducive to great trading opportunities at this moment. Non-commitment of the market, so you have to be quite careful. Now, taking a look at the intraday time frame for the ES is really not much to talk about, so I'm not going to provide a whole lot of guidance. Very, very narrow overnight range. The market likely in a wait-and-see mode as we have a slew of economic reports that are out. We have earnings season kicking off. So basically, a lot of uncertainty at the moment. We could see some fade-the-edges type of action, but the overall flow has been to the upside for the most part here short term. One thing I will watch for is the 55 to 57 level for a retest. So here's the 57 level right here. That's been important to us. And then here's 55s right here. Should price return to that zone, you would expect big bulls to come in and defend it for a shot at returning prices to 65s and perhaps into recent highs between 71 and 77. So that's a zone to watch here should price retest that area sometime in the next day or so. Let's take a look at crude oil. Here's crude. If we look at this thing on a higher time frame right now, what you'll notice is price is holding in a large range. This range has kind of been expanding as well. We had this impulse move here to here, and then we had this little dip above it. Failure to get above it led to a move downward. This one we were talking about 51.67 being very important. Price tried to hold below that area for the better part of 2 days, and then the stops came out above it, and now we're holding above this zone. So at the moment, if there's a retest of 51.67 from above, very similar to that 55 to 57 zone in the ES, this could also provide a short-term opportunity back toward 53.50, 54, and perhaps a little bit higher. But again, inside a trading range is not the friendliest to trade. You've got to be at the edges. And right now it looks like the crude oil market is still trying to figure out where the edges are, so it makes it even more challenging. So got to continue to be patient with crude up here. I mentioned before, any holding above, acceptance above 52s will start to shift the tide to the next price distribution above, which is 52 to 62. So again, very important part of the chart here because again, if there's any failure to hold up here above these 52s, this thing could start its way back toward 46, 69, and 43. But the market has been reluctant to do anything right now, so we got to continue to watch this and just observe how price behaves around these key levels. Let's take a look at the intraday time frame for crude. Here it is. So far we've seen the previous session's close go offered. Price pushes through the bottom of the pivot range and drops and is holding 52.30. What I mentioned earlier here is 51.67 to 52 from above could offer an opportunity to defend if you're a bull here. So bringing this thing down a little bit like this, you can see again, price formed a very narrow range here, broke it to the downside. Again, here's 51.67, here's 52. Should price drop into that zone, watch for signs that the bulls may come in and defend. Otherwise, it could get another choppy mess. So right now, not a whole lot to really look to on an intraday. We do have a downward move here and a little bit of an LVN, so bears may want to defend here to try and test 52 short term. But again, this thing is building out within a range, and it makes things a little more challenging here. So we got to wait for edges and be more patient. So watch 52.73 here, as it could lead to a retest of lows. Above 52.73 runs the stops back toward the prior close. Let's take a look here at gold futures. Here's a look at gold. One thing with gold right now is, bring it over here, is that it's been making a nice little recovery off the lows, and that's it's been a pretty impressive feat to see how this thing has pushed back up despite the significant sell-off that we endured here late last year. Now we've seen price come right into 1200 and 1180, which has been our major zone of resistance or prior resistance turn support. And now what you're seeing here is that price is trying to push through 1200. Price got as high as 1207.20 and failed to hold above that zone, and then closed back below the midpoint and back below 1200. That's usually what I call a rejection day. A rejection day, though, typically occurs at a new edge or at a rejection point, and right now this is just retesting 1200. So right now you have the flow is up. I would be careful of a rejection day here because there's a very strong trend at work. But what you see at the moment happening is the midpoint of the previous session is currently being defended, and above that level starts to squeeze again. So this is a zone where you know that above 1200 will start to squeeze yet again. Bears are trying to keep that area offered, and if they could run the stops back below 1190, then you could see this thing pull back some. But overall, this thing has been flowing to the upside. You got to be careful for any traps up here, and I think that 1190 to 1200 could lead to the next key move here one way or another. So continue to watch this area, but the flow is still to the upside, and I'm not going to make any snap judgments on any potential reversals at this time. Although we have been trending down and pullbacks have been selling opportunities, we got to continue to watch some of our key levels, and that's 1200, 1190, 1170, etc. So we'll continue to watch these as well. Now let's take a look here at the NQ. The NQ here on a daily time frame. One thing we've been watching for is this prior high and also the previous week's close price. So right there, that's the zone that I've been talking about here throughout the week. That price could hold above that zone, but if they can't push to new highs, then the stops become vulnerable below that area. And that's what I mentioned at the beginning of the week, and we've seen 1, 2, 3, 4 days of trading right within that zone. What I did also mention at the beginning of the week is the first retest of 49.94 half will likely be a buying opportunity. And yesterday was the only day where we finally tested that level. We probably went 4 points past 94s, and then we came all the way back up and closed 44. So it was a 50 handle rally from that zone with just a few points of adverse excursion. So a very nice retest opportunity, but that also gives us a reference point now to watch because we know stops are below there. So overall, the flow still remains to the upside. Bulls came in and defended 94 half as they were supposed to, and now we got to see if this thing can push through new highs, because if it can push through these recent highs here, the next level up is going to be the R50 monthly pivot there at 51.41. That's the 50% expansion. That could be the next level up very, very easily. So again, we're holding right in the zone we talked about at the beginning of the week. We haven't gone any direction just yet. And that's kind of characteristic of what the market's doing right now, just kind of in a holding pattern at certain points of the month. So right now, we'll see if we can get a continuation and a push into 41.51. Otherwise, failure to hold those 49.94s could open up a return back toward 48.50. So that's the key pivot to watch. Short term, let's look at the intraday here. On a short-term basis right now, you can see that price took the previous session's close bid and is testing the previous high right there. You can see a nice recovery. The previous session here, big time push downward. Here's your 5,475, and then you can see right here, 49.94 half is right there. And price came down, held, pushed just below it, and then got back above it, got back above this 5,004 and held, and then just slammed through VWAP, ran to R3, and now we're up higher. So again, that's what a major significant bottom can look like when you're finding the right spots. And that 49.94 half was the previous month's close, and you can see right there a great defense, a solid rally off that zone. Because of that, again, there's still an upward bias, but we also know that there's been over the last 4 to 5 sessions, there's been basically a nice balanced profile that is created. So up here, you got to be careful because of the potential to rotate back to value. Down here, it makes a lot better sense to buy, and that's why you saw this thing turn out. So overall, after this nice move, the flow is still up. Very quiet overnight, a lot of economic reports coming out, so it could be a fade the edges type of morning, but I really don't see anything on an intraday right now to get me excited about entering and jumping into this market. So we'll see how this thing progresses, and if price can push through those 51.50s, we could have a nice rally on our hands back above into 51.41. That's all for now. I do want to provide one quick announcement. The Denver Trading Group will be hosting me later on this afternoon at 3:30 p.m. Central, 4:30 p.m. Eastern. And I'm going to be doing a presentation for an hour called the Absorption Signature. It's going to help you find some of the best reversal signatures that you'll find in any time frame. I'm going to show you the power behind them and why they work, and then where to enter and how to manage the trade on these powerful reversal signatures. So this is something to look forward to later on this afternoon at 3:30. I'll tweet about it and put a link out as well. So thanks everyone for hanging out. We'll see how this plays out the rest of the day. Good luck and trade well.